Welcome to a look back on 2015, and we're going to take a look at some commodities and currencies today. Today I'm here with George and Tone. How's it going, guys?
Hey
Very
Theo.
well. Happy last day of the year.
Yeah.
Yeah, same to you guys. Happy last day of the year. And what a year it has been for commodities, and what a year it has been for the US dollar. Um, you know, Really interesting trend there. And right now, I only have one chart, but I just want to show the copper price. We don't usually talk about it, but I think it's interesting, and you can see it's at a level that it was at 2009. So it's pretty low. I mean, it was over $4, and now this per pound, and now it's about $2.14 there per pound. So that's a nice downturn over the years, and this year it's just been going down basically. And a lot of that is fueled by the economy in China, but it's interesting. I think that most commodity charts look like that. What do you think?
Yes, I agree. I think that if you look at pretty much all of them, if you overlay them over each other, they're in major downtrends, and a lot of them are even below 2009 levels, which is fascinating to me in some ways because they're priced for Armageddon, and we're nowhere near that. So, I think we'll talk about it as we show our charts, but I'd say a bounce is doing some of these things. At least a dead cat bounce at some point. Maybe after people take their tax losses on the year, or they come back and look for some good data points because all the bad news is pretty much out there in commodities and supply and demand. So we'll see.
Indeed, indeed.
Yep.
Okay, George, yeah, show us what you've got today. And as far as the bad news, yeah, I mean, everywhere I look, left and right, there's just bad news about oil. Oil is going down. Oil, bad, bad. So, let's
Yes.
see. It's just everywhere I look. Gold too, but I think oil is the hot topic right now, like on Bloomberg or whatever other network. If you just happen to turn it on, they're just
One of the
they.
things that I like to look at is when bad news gets discounted and price doesn't continue to go down as a result of bad news. That's usually a good sign of a bottom. But I'll talk about that a little bit in some of the sentiment work I have up here. But let's start. Just yesterday we talked about Bitcoin, and I said that I was looking at a short here in the short term, and we've gotten a little more deterioration on the 4 hour. The 50 and 100 have crossed over, and you're getting some divergence in the RSI as well. And I continue to think that it's going to go lower. Maybe it's just waiting until after New Year, holding in here, but the price isn't really in a place where I would be buying it. So I've put some shorts on here. And in saying that, the other indicator that I've been looking at with regards to Bitcoin, and this is my main indicator these days, is the onshore-offshore spread of the yuan. And as you can see, the last couple of days, you've had big moves up, followed by candles resulting in dojis, and the spread continues to kind of widen. But I think that the Chinese are probably going to try and stabilize the devaluation in the shorter term. But my speculation would be that it's not going to be sustainable, and they're going to want to get more aggressive. But they might wait until somewhere near Chinese New Year when the markets are closed for a week or two, and they can kind of quell anxiety as they start to devalue more. But that's just speculation on my point. And more to like the point of sentiment with Bitcoin, you're starting to see things like this pop up. Like Bitcoin is the winner in currency this year. It's the biggest gainer by far over everything. And you're seeing things like Bitcoin won 2015, Apple did not. So to me, that's kind of toppy stuff going on, and could be warranted for a sell-off. On the other hand, you have things like this for oil, talking about how bad it is, and it couldn't be worse, and supply is everywhere, and the price is going to 20. Goldman Sachs is saying, and people are following in that. And yet, like yesterday, you saw more supply come on. The Saudis aren't going to cut price, and you kind of had a fairly decent day in oil despite all that. Sorry, wrong chart. and it closed where it needed to close. It closed above that 36 level, despite all the bad news. And like you look at the MACD here and the RSI, it's kind of diverging with price. Um, I could see a nice rally here going on just based on the fact that all the bad news is priced in, and maybe something geopolitical happens that could cause it. But I mean, that's just speculation again. But I'm assuming that there's going to be a dead cat bounce in a lot of these. Um, Commodity stocks, and oil to me is looking like one of them that is ripe for that at this moment.
Hey,
Hey,
George,
George,
sorry,
sorry,
you see that
see that
divergence
divergence?
on your chart? It's awesome. From the indicator on top and the MACD indicator, you have a lower low in price and a higher low in your momentum indicator. It's really clear.
Exactly. So, I mean, to me, that seems like you at least could get a bounce to the 50-day at 40. But, I think this thing at some point could probably get back up towards 50, but I can't tell you when. I mean, I want to just see the price start to go up. And really, I want to see it go up as the bad news continues on, because Iran is going to start coming in with supply as well and all that kind of stuff. So, we always talk about commodities and the U.S. dollar, and they're inversely correlated. And the U.S. dollar, as we've said for a while, has been strong, and Theo alluded to that. It had this epic run from 2014, and it's kind of stayed high. It's not making new highs now, and it's kind of stabilizing, which has been one of the catalysts for why commodities have kind of had a little bit of relief in here. But that hasn't helped any of the commodity currencies. So I'm talking about countries like Australia and Canada and South Africa that are really reliant on commodities and China for their economic activity. So this is Australia USD, and as you can see, it's gotten absolutely hammered over the last year. Um, this is Canada USD. Australia has a lot of different mining interests, particularly iron ore, copper, uranium, oil. So and Canada the same thing. I mean, hammered as well. And the same thing. That's Canada USD. Oh, sorry, same chart twice. This is the rand versus U.S. dollar. South Africa, very gold intensive. A lot of other mining stuff, and it's gotten annihilated as well. I mean, this is the kind of stuff that happens when you get a commodity slowdown, and you have a lot of these countries that rely on that. So here is a chart, a monthly chart going back to 1996 of a commodity index, and as you can see, we have broken on a monthly level below major support, and there's nothing in this chart to tell me that a reversal is in place at any point soon. In fact, look at those monthly moving averages. They're all sinking, and even more, like the 50s, the 100's about to cross over the 200 as well. But again, I mean, then you go and you peel it back a bit to the daily, and you have a little bit of a rally in here. You see the RSI and the MACD again diverging with price a bit. So again, I could see a relief rally coming in at some point, and you're starting to see that in iron ore, for example, where you've kind of had a pretty big rally here since the beginning of December, as you can see at the bottom of this chart. And my final chart was oil, which we talked about, and really that's all I have for today. And I'll hand it over to Tone.
Hey, thanks,
Thanks,
George. I
George. I
think
think
looking,
looking.
am I sorry guys, I'm on an echo. Anybody else hearing that? Okay. Um, Looking at your chart of oil when you had the indicators on there, I think just looking at that, I'm like I might be more bullish on oil going into next year than I was 10 minutes ago. I really like that RSI divergence that you had. I don't have it up on my charts, but I'm glad I saw that in your charts. Okay, so I'm just gonna briefly mention the S&P 500. I didn't get to do it on the last video. This is a commodity-focused video, so I'm not going to talk about the S&P 500 too much. So this is the latest tradable future as of, I don't know, half an hour ago or something. And the S&P 500, we have this very, very, very clear range. And while in this range, you had what looked like a breakdown that turned into a clear reversal candle, and then you had one more reversal pattern, not my ideal reversal pattern, but a reversal pattern, the bullish harami. And now we're in a slightly We have a slight minor range within a big range. So I am not touching the S&P 500. My optimal scenario is a scare big enough to actually scare people, so down to like 1950 area early next year, and then from there, um, a bounce that nobody believes in that eventually breaks out. So I am bullish on the S&P 500. What else will make me bullish is consolidation near the oops, consolidation near the top of the range. So if we break out of this range and then we consolidate in here, and then we have a nice big breakout, and that would also make me bullish S&P 500. So now let us get into commodities. So let's do short term first, and then we'll zoom out. Let's go with oil since we talked about oil. All right, so here's oil, and I kept saying for the last few months that I don't think oil has hit its low, but I was hoping for a bigger bounce. You had again a very, very textbook-like reversal candle pattern. We had that doji, looks like a combination between a doji and a hammer, which is just a beautiful reversal candle. And once again, these pullbacks have been very, very short. They've been too short to re-enter the short trade, which is why I did not re-enter the short trade. Had this rally gone all the way back to 40 or even higher, and I saw another reversal candle from there, I probably would have shorted at 40, but it was just too shallow. Same thing in this area here. It was a pullback to 45, but it was just so shallow and it didn't make it all the way back to 45. Now, as regular followers know, I had some losses on oil this year trying to short it off of this triangle and then again off of this triangle. And this is the last time I'm going to talk about these triangles because they're going to come off my chart, and also because I'm going to hate dwelling on the past. And I lost money trying to short in this area, and then I flat out missed this. This was the perfect time to try and do another short, but I just missed that one, and then I didn't want to chase. So what are we looking at going forward? Looking at the longer chart with the divergence in the momentum indicators and articles from Goldman Sachs saying we're going to 20, I think there's going to be a bounce, and I think there's going to be a strong bounce. After that bounce, we'll probably are going to go lower. I do think 30 and maybe upper 20s is in the horizon. But now I'm a little more bullish. So if I see stabilization and I see a breakout above this area, I'll probably go long oil and hopefully see it go back to 45 or maybe even a little higher than that. And this is very, very critical right here. This was big. I don't know how many traders remember this. I remember this clearly. I was still working. I think at Bears. I think Bear Stearns was collapsing at the same time. I think I was already at JP Morgan. I was sitting in the same office though, so it's hard to remember. But I remember this bounce clearly. I also remember this big collapse in oil. This was just unbelievable. And look, we are. This is a very significant line right here. This is big. And if we close the year below this line, long-term oil doesn't look good. We are probably going to hit 20s, but because everyone is screaming gloom and doom, we probably won't as quickly as they expect. So a bounce like this is very, very doable. So I am looking for a bounce here. Hopefully it's a strong bounce. We can even bounce to 80 actually. I mean, this is this looks good right here. This is very, very clear support. Maybe there is going to be some more war sabers rattling or whatever. So long-term charts are very, very different than short-term. I am looking for a bounce, but closing the year below the 2008, 2009 lows, intraday lows, closing lows, is bad. So I do think that we will go lower, but I do see a bounce right here. So these are the more long-term views over the next few years. All right, short-term gold. Again, in my personal trading, a little unfortunate. I think I went short at 11.25, 11.30-ish. I went short gold here, looking for a complete collapse in gold down to 1,000 or lower. And unfortunately for me, I could not hold through this, was taking on too much pain, so I cut my losses. I hit my stop loss, I believe, at 75. So I hit my stop loss, I believe, around here. Unfortunate because I was short too many commodities. My portfolio just couldn't handle it. I was trading other things as well, so I had to bounce. Again, I did not want to chase. I missed this. This would have been a good profit. I was looking to short on the pullback. I was looking to short again here, but very unfortunately, the pullback was very shallow. The counter rally was very short. It was very quick. Unless you are literally in front of your screen all day, every day, even if you were, this is kind of scary because it's so short on a clean counter rally to re-enter your position. So I didn't, and now we are in a very, very clear range. And I'm gonna wait till it comes out of this range. Personally, I'm still bearish. I am still bearish gold. The moment it consolidates in this area and breaks below 1050, I'm gonna go short. I'm not gonna miss it this time. So going into next year, I'll be watching it carefully. It would be nice for it to rally, get back to 1100, maybe even close above it, get all the gold promoters all riled up, screaming we're going to 100,000 on gold, and then watch it swiftly fall down to 1,000 and under. So that's my short-term outlook. Let me close the short-term. And here's the long-term outlook. It looks bad. It looks really, really bad. So here is a triangle, and the length of this triangle, the fat part of the triangle, is about 200. So I am looking, and actually we're almost there. So here's the 200. So to me, 1,000 is given right there. That's not much, and 1,000 is good support, but I don't know. I mean, this is this is what really needs to hold. This is what really needs to hold. Then you have more support right here, and the way things move is people have to really, really hate something before it can swing to the upside. This was a beautiful breakout right here. If anybody timed it, I don't remember if I did. I don't remember my trading from 7 years ago, but But yeah, these triangles, I mean, I fully expect this triangle um, to hit its target. And this is a beautiful back test right there, back to 1200. So I am expecting 1,000 to hit. It's taking a little longer than I expected. And honestly, it would be nice to see a complete collapse and breakdown, and then everyone starts complaining, and everyone gets out of gold, and that would give it enough energy to do that. So that's basically my outlook. I will be very bullish on gold in due time, but for now, I'm still bearish. A weekly or a monthly close below 1,000 is really, really bad. It'll set it up to go to my targets of 900 and possibly lower. That's my long-term outlook. And one last point on gold for people to keep in mind. I think the bottom would be very, very different to this. This is where people just forgot about gold. And the way gold topped out, you really only had one chance to get out at the top. Well, two chances, but they came very, very close. I think you'll only get one chance to get into the bottom. I think the bottom in gold would look closer to this. These are monthly candles, by the way, right here. So you only get like a month or two to time this trade. You're not going to have, multiple years worth of entries like you did between 99 and 2002. I think you'll get one shot. You might it might even be one of these candles. See, you had 2 months in a row where you could have got in, and then same thing on the back test in 2008. You had 2 months on to get in. I don't think you'll get that kind of chance. I think there'll be like one monster crash, and then you'll only get one chance to get in on the low, and then it will just swing up to the upside really quickly. So for long-term holders, start scaling in. If it does go under 1,000 to like 800 to 900, you can start scaling in. Or if you're really lucky, try to time the bottom. So that's the long-term chart on gold. Let's close that. Almost done here. Silver. Short-term silver. Again, in my personal trading, this is probably my worst trade of the year. I shorted silver on this breakdown, somewhere in here. The breakdown under 1450 I thought was the nail in the coffin for silver. Silver is very, very leveraged. When I saw this breakdown, I said silver is going to 1350, probably even lower, and I shorted, and I held through this, and I thought I was out of the woods when my position came back to break even. Probably should have been happy with my break even and got out. And George was sitting next to me at an event where I was watching this happen to my portfolio, which is something nobody ever wants to see. I think my stop loss came at a very unfortunate time, somewhere in this area. Of course, it did have the ultimate high for the year end, and I missed out on all of this. It's just bad timing. I mean, it happens, right? You have your swing trade already. You know what you're expecting, what's going to happen. It happens exactly like it, but you're not able to hold through a short-term swing against you when Yellen does not raise rates when you think she will, and she raises them a few months later. Okay, so let's not dwell on the past. Let's talk about the future. And we're range bound again, just like in gold. And as the dollar moves up, I expect silver to break down. Again, I don't think we bottomed. We are now making significant resistance right here at 14. I'm probably just gonna stick to gold. I may stay away from silver this time. And silver also seems to be the leader. If I go to the long-term chart, let's close this. we're significantly lower, right? So the same triangle that you saw in gold, make this thinner. The same triangle is a $5 guy right here. So we're looking at a $5 fall, which we had. But look now, we are forming another triangle. And that's bad. That's another $5 range. And there it is. So here is your ultimate low. We're already way below this. Silver topped out earlier than gold did. So silver is our leader, and silver still looks bad. Again, where did that come from? I don't think you're going to get 8 years of consolidation where people forget about it. I think you'll get one shot to get in, kind of like this. And I think that shot is going to come from this area. So that's what I'm looking for. I'm looking for a complete collapse in silver to watch it go down into the circle. And then when everyone starts screaming and maybe there are some class action lawsuits against gold and silver promoters, we get that. So that's kind of my outlook. I'm really tempted to just short silver right here, but I don't know, maybe I just convinced myself that silver is a good short again. But it's unfortunate because even something as small as this, if you're trading in the future space, maybe I'll just buy some long-term out-of-the-money puts or something like that. But I'm sure they're pricey. We'll see. I'll take a look at the prices. But that's the longer-term outlook for silver. I mean, look, if you're a trader, you gotta trust these triangles. At least I love triangles. Maybe I'm crazy, but I mean, what is that? That's a nice $20, right? And that'll take us down to 10. So on our way, almost there. All right, and finally, I'm not going to even talk about the dollar. George handled. Oh, maybe real quick. We're nowhere near the high. So I think we're going to get there. I think this is pretty critical, our Mendoza line right here. And once we break out of this, what do we got here? About 20 points. So a breakout, 20 points will take us to here. That's what I'm looking at. Don't know when, but that's how I'm seeing the dollar. Let's close that, and I'm already going on too long, but I just noticed this today. This is coffee, and this is just crazy. I don't know how people around you or your area, wherever you are in the world, but everywhere I go, I was just in Korea, everybody loves coffee. And I can't believe how low this price is. I mean, we're looking at a 20-year lows right here. That is just unbelievable. I thought this was the low. This is the last time I looked at coffee. I remember looking at this, and I remember telling my brother-in-law, who's a portfolio manager, hey, you really want to check out coffee. And I did not make money on this. I didn't trade this. I actually still not sure how to actually trade coffee. I guess you can buy the future outright or maybe calls on the future. I'm not sure. But this is crazy. I don't even know what to say to that. Check out the stock chart of Starbucks. I'm sure they've been doing really, really well because they've been taking advantage of this the last 5 years. And it's not going to last. So what happens when the price of coffee goes up to its historical norm? I'm guessing at least 250 and maybe stay there. What if it spikes back up? So I don't know, just something to keep in mind. I mean, that's if your $5 cup of coffee if you pay $5 for coffee now, Imagine what happens when prices of coffee go up, 200-300%, which would be totally normal from a historical standpoint. But I guess the dollar may have a lot to do with it, with the price of coffee going down, priced in dollars. But still, I don't see coffee drinkers going down. I still only see them going up. All right, I think I've rambled on longer than I should. Back to you, Theo, unless you guys have
Okay.
questions or comments.
No, I just have a comment about the triangles that, sometimes they just make new triangles. And, sometimes divergence can just continue diverging into the ground. Or it could be the other way. It could keep that, bearish divergence all the way up to all-time high the whole time. So, but yeah, nonetheless, I tend to agree with you guys about oil. I think it's going to be interesting. Let's see if it does bounce or not. But I think a lot of people are watching. And yeah, I want to thank everyone for watching. I want to thank everyone for watching our show in 2015. And make sure to check us out next year, too, on World Crypto Network and Bitcoin.com. Thanks a lot for watching this time, and talk to you next year.